Hello, YouTube family. Welcome back to our channel. Today, we have an important and comprehensive topic, health insurance. It's something that many of us overlook or find confusing, but it's absolutely crucial for protecting ourselves and our loved ones. So, grab a pen and paper because we're diving deep into the world of health insurance. Let's get started. What is the coverage you and your family need when it comes to children's health insurance coverage? It's generally recommended to have a minimum coverage of 3 lakhs. This ensures protection against unexpected medical expenses, including heart surgeries, for your little one. However, consider factors such as your child's medical history and specific healthcare needs when determining the maximum coverage amount. For adults, it is advisable to have a minimum health insurance coverage of 5 lakhs. This amount provides a reasonable level of protection and can help cover expenses related to heart surgeries and other medical treatments. However, as with kids, take into account your individual health requirements, family medical history, and other factors when deciding the maximum coverage needed. For instance, if you are prone to heart disease, then understanding the maximum amount you need for heart surgery costs is crucial. Begin by researching the average cost of heart surgery in your city. Speak to healthcare providers and hospitals, or consult online resources to gather accurate information. Knowing the approximate expenses will provide a baseline for determining your coverage amount. What are the floater plan and individual plan? Floater plan. A floater plan, also known as a family floater plan, is a type of health insurance that covers multiple individuals under a single policy. The policyholder, typically the primary breadwinner or head of the family, can include their spouse, children, and sometimes even parents or in-laws as dependents. The sum insured coverage amount is shared among all members covered under the policy. Key features of a floater plan include shared coverage. The total sum insured can be utilized by any covered family member when they require medical treatment, subject to policy terms and conditions. Flexibility. Floater plans offer flexibility in terms of adding or removing family members from the policy based on changing circumstances. Cost-effective. Floater plans often offer cost savings compared to individual plans, as the premium is calculated based on the overall risk of the entire family rather than individual members. Limited coverage. The total coverage amount is shared among family members. If one member exhausts a significant portion of the sum insured, it may leave less coverage for other members in case of subsequent medical needs. Individual plan. An individual health insurance plan provides coverage to an individual policyholder. It is specifically designed to cover the medical expenses of a single person without extending coverage to dependents. Key features of an individual plan include personalized coverage. The coverage amount is specific to the individual insured based on their selected policy and the sum insured. Independence. Each individual policyholder has control over their own policy, including the choice of coverage, policy duration, and renewal terms. Flexibility. Individual plans offer the flexibility to customize coverage based on personal requirements, medical history, and budgetary considerations. Higher coverage. In some cases, individual plans may offer higher coverage amounts compared to the shared coverage provided by a floater plan. Higher premium. Individual plans are typically associated with higher premiums compared to floater plans due to the individualized coverage and risk factors considered. What are the key factors that you should carefully check before buying one policy? Coverage and benefits. The first thing to consider is understanding the coverage and benefits offered by a health insurance plan. Health insurance plans typically cover a range of medical expenses such as hospitalization, surgeries, diagnostic tests, prescription medications, and preventive care. However, it's important to read the plan documents carefully to determine what is covered and to what extent. Additionally, find out if the plan includes coverage for pre-existing conditions and emergency services. Remember, not all plans offer the same level of coverage, so choose one that aligns with your specific healthcare needs. Room capping. Room capping, also known as room rent limit or room sublimit, refers to a provision in health insurance policies that restricts the amount of coverage provided for room charges during a hospital stay. It sets a maximum limit on the amount that the insurance company will reimburse for room rent expenses incurred by the policyholder. The room capping typically applies as a percentage of the overall sum insured or as a fixed amount. For instance, if the policy has a room capping of ones of the sum insured, and the sum insured is 5 lakhs, the maximum reimbursement for room charges would be Rs 5,000 per day. If the policyholder chooses a room with a higher charge, they'll have to pay the excess amount out of pocket. Network of healthcare providers. Next, let's talk about the network of healthcare providers associated with the insurance plan. Each insurance plan has a network of doctors, hospitals, clinics, and specialists with whom they have agreements. It's crucial to check if your preferred healthcare providers are part of the network. Access to your preferred doctors and hospitals ensures you receive the care you trust and feel comfortable with. Be aware that some plans may require referrals or prior authorization for certain specialists, so keep that in mind when evaluating the network, deductibles, copayments, and coinsurance. Now, let's move on to the financial aspects of health insurance. Deductibles, copayments, and coinsurance are important factors to consider. A deductible is a specified amount that the policyholder must pay out of pocket before the insurance company starts covering certain healthcare expenses. It is a cost-sharing mechanism that helps determine the initial responsibility of the insured individual for their medical costs. Deductibles are typically set on an annual basis, meaning they must be met each policy year before the insurance coverage kicks in. For instance, if you have a $1,000 deductible and you undergo a procedure that costs $800, you would pay the entire $800 out of pocket. If you subsequently undergo another procedure costing $400, your cumulative out-of-pocket expenses would reach $1,200, surpassing the $1,000 deductible. Deductibles are usually reset at the beginning of each policy year. Once the new policy year begins, you would need to meet the deductible again before the insurance coverage takes effect. Copay or copayment? A copay is a fixed amount that the insured individual pays out of pocket for a specific healthcare service or prescription medication. It is a predetermined fee that is typically due at the time of service. The copay amount can vary depending on the type of service or medication, such as a $20 copay for a doctor's office visit or a $10 copay for a generic prescription. For example, if you visit a doctor's office for a covered service and the copay for that service is $30, you would pay $30 directly to the healthcare provider, and the insurance company would cover the remaining cost of the service. Coinsurance. Coinsurance is a cost-sharing arrangement where the insured individual pays a percentage of the total cost of a covered healthcare service or procedure. The percentage paid by the individual is typically specified in the insurance policy, while the remaining percentage is covered by the insurance company. For instance, a common coinsurance ratio is 80-20, where the insurance company covers 80 of the cost and the insured individual is responsible for the remaining 20. For example, if you undergo a covered medical procedure with a total cost of $1,000 and your coinsurance is $20, you would be responsible for paying $200, $20 of $1,000, out of pocket, while the insurance company would cover the remaining $800. It's important to note that copays and coinsurance often have limitations and are subject to certain conditions and policy provisions. Some insurance plans may have maximum limits on copays and coinsurance, while others may exclude certain services from these cost-sharing mechanisms. Additionally, the copay and coinsurance amounts may vary depending on the type of service, such as preventive care versus specialist visits. Prescription drug coverage. Prescription medications can often be quite expensive, especially for chronic conditions. That's why checking if the health insurance plan includes prescription drug coverage is crucial. Look into the formulary, the list of medications covered by the plan, and see if your regular prescriptions are included. Additionally, consider the co-payments or co-insurance required for prescription drugs. This information will help you understand the out-of-pocket costs you may incur for medications, limits, exclusions, and waiting periods. Insurance plans often have certain limitations, exclusions, and waiting periods. It's important to carefully read and understand the fine print. Pay attention to any restrictions or specific conditions that may not be covered by the plan. For instance, certain elective procedures or alternative therapies may have limited or no coverage. Additionally, some plans may impose waiting periods before certain services or treatments are covered. Knowing these limitations in advance will help you plan your healthcare needs accordingly. Customer service and reviews. Lastly, let's talk about customer service and the importance of reading reviews. A reliable and responsive customer service team can make a significant difference when dealing with claim processes, resolving issues, or seeking assistance. Before finalizing a health insurance plan, take some time to research the insurance company's reputation for customer service. Look for online reviews and ratings from current policyholders to get an idea of their experience. A positive customer service experience can bring you peace of mind during stressful situations. What is no claim bonus? In health insurance, no claim bonus is a feature that offers a discount on the premium for policy renewal if no claims have been made during the previous policy year. The discount is applied to the following year's premium and can vary depending on the insurance company and the specific policy. It encourages policyholders to stay healthy and minimize the need for medical treatments or healthcare services, thus reducing the overall claim burden on the insurance company. What is the waiting period for health insurance? The waiting period in health insurance refers to the specified period during which certain medical conditions or treatments are not covered by the insurance policy. It is a predetermined time frame that starts from the policy's effective date or the date of enrollment. The purpose of a waiting period is to prevent individuals from purchasing insurance solely to cover immediate or pre-existing medical conditions, thus ensuring the sustainability and fairness of the insurance system. Here are some key points to understand about waiting periods in health insurance. Pre-existing conditions. One common aspect of waiting periods is the exclusion or limitation of coverage for pre-existing conditions. A pre-existing condition refers to any illness, injury, or medical condition that existed before the insurance policy's effective date. During the waiting period, expenses related to pre-existing conditions may not be covered. The duration of the waiting period for pre-existing conditions varies among insurance providers and policies, but it typically ranges from a few months to a few years. Initial waiting period. Health insurance policies may also have an initial waiting period, which applies to certain types of treatments or services. This waiting period can vary depending on the policy and typically ranges from 30 days to 90 days to 90 days. During this period, the policyholder cannot claim expenses for specific treatments or services. Waiting period exceptions. While waiting periods generally restrict coverage, there are usually exceptions. Emergency medical treatment, accidental injuries, and hospitalization due to accidents are often exempt from waiting periods and are covered from the policy's inception. Employer-sponsored plans. If you have health insurance through your employer, waiting periods may be shorter or waived altogether. Many employer-sponsored plans have immediate coverage for pre-existing conditions, especially if you had prior coverage under another employer plan. And that's a wrap, folks. We've covered the essential things you should carefully check before purchasing health insurance. Remember, health insurance is not just a financial investment, but also an investment in your well-being and peace of mind. Taking the time to evaluate coverage, benefits, network, financial aspects, and customer service will ensure you find the right plan that suits your unique needs. If you found this video helpful, don't forget to give it a thumbs up and subscribe to our channel for more informative health and personal finance content. Also, let us know in the comments below if you have any health insurance experiences or tips to share. We'd love to hear from you. Stay healthy, stay informed, and until next time,